What's up, YouTube? Welcome back to another video. In this video, we're going to be covering a trade breakdown. I'm just going to be showing you guys an analysis, a trade analysis from NZD-CAD, a trade that I can cover for you guys that kind of show you guys, give you an idea of how we trade the markets. With that being said, I'm not going to try to get into a rant about it. If you guys want to join our mentorship, the link is down in the description. We have our Instagram down in the description if you need to contact me personally about anything, right? All the information will be down in the description. Okay, so let's jump right into it. And I'm going to give you guys a little small overview on NZD-CAD. You can just see it right now. Just looking at it, we have the market giving us this clean mitigation trend, right? We have high, low, high, low, high, low, high, low. You guys can see the market is giving this clean bearish trend towards the downside. And inside this bearish trend, you're going to see many things. You're going to see distributions occur. You're going to see mitigations of those distributions. You're going to see more distributions, mitigation of those distributions, more distributions. You're going to see the market redistribute. So instead of going back to mitigate the main area, it's just going to redistribute and continue the market lower. We're going to focus on the most recent mitigations that occurred this week of September, or the last week of September. We're going to cover these recent mitigations. Okay, so looking at it, if you guys don't know the three keys here, then learn the three keys, right? We have structure, supply and demand, cause and effect. That's exactly what I just showed you guys. The structure, our structure is bearish. Our supply and demand is these distribution zones, the unmitigated order blocks, everything of that sort that we know that the market wants to react off of. And then cause and effect is just us validating that the market wants to react off that area. So I'm gonna go ahead and give you guys a good example of cause and effect while I explain this certain setup that occurred here, right? So going back into it, and we're just gonna go all the way back and replay this all the way back to here. So looking at NZD-CAD, we had a certain number of things happen on NZD-CAD. We had this rate of liquidity that occurred here. As you guys can see, we rated these highs, rated Asian highs, and the market continued lower, right? And then once we broke this low here, we confirmed this manipulation that happened. So what happened here was we had a news event that came back to mitigate this manipulation here. We didn't quite reach the 50%, but we did come back and mitigate this manipulation, right? So after that, guess what we're playing off of next? As this market is doing this lower time frame mitigations, we're trying to play this next. So of course, this was our next supply zone that we're going to wait for some type of entry within, right? So what is the best price action that gives us that validation that the market wants to go lower? And that's going to be a distribution, right? It's always going to be a distribution. Distribution validates that sellers are getting into the market, right? So, and you tie that in with the distribution happening inside of a supply zone already, or like an area that the banks and institutions reacted off of, like something like this huge manipulation, and then you see a distribution inside of that manipulation, you're golden. Okay, so this is the type of setups that we're looking for. Is we're identifying our supply and demand zones, and we're looking for the market to validate that it wants to continue to sell from those supply and demand zones. Okay, so looking at this right now, we have our distribution forming, we have our buying climax here, and then we have our automatic rally right here. Okay, the buying climax and the automatic rally is just beginning our range. That's just telling us what our range is. And then we have our secondary tests right here. Secondary test with all of this is just building liquidity. Okay, above the buying climax is going to be a lot of liquidity. So mainly what we're waiting for is waiting for our UTAD. Usually sometimes you'll get an upthrust, right? Because we know there's different types of schematics. Sometimes the upthrust will come in raid liquidity before the UTAD does, but sometimes the upthrust will not. Okay, it happens like that. So, but the main thing that we're looking for is that liquidity rate. That's how you know when your UTAD comes in, is when you get that main raid of liquidity and you see the market take out all this liquidity. So to make this even more simpler, I can remove all of this numbers and things like that. So essentially all we have here is just a lot of liquidity sitting up here. Okay, if we look at Wyckoff from a different view, and I'm gonna give you guys this view because it's easier for people to see it like this and understand the meaning behind Wyckoff, right? So for the people that understand Wyckoff, we know this is a buying climax up here, and I'm gonna make it smaller. So just the we know this is the buying climax here, and we know this is an automatic rally. Okay, I'm gonna show you guys two different ways that you can look at the exact same thing. Okay, so buying climax automatic rally, we have multiple secondary tests over here, and we don't know whether or not this is our up thrust yet. This could be another secondary test, right, from our Wyckoff people. But for just looking at it at a regular way, this is just liquidity. All of this up top here is just liquidity. So what are we waiting for? We're waiting for that manipulation, right, that taps into our recent manipulation. So we need the manipulation of this liquidity that taps into this manipulation that shows a mitigation of here. So we need this to be mitigated here, and then we need us to raid liquidity, and we need a break of structure. That is going to confirm a UTAD for us. Okay, so let me go ahead and let's go ahead and play this forward a little bit more. So now we can see the market has tapped into our manipulation. We have tapped into our supply zone. Okay, the market can do one of two things. Either we can create another schematic, right? And this can happen. We can create another schematic, and you can take an entry off of this smaller schematic, or the market is still going to continue to play this bigger schematic here. So understand that this right here is potentially our UTAD. Inside of the UTAD, we can have a smaller schematic. We can have a smaller distribution, which makes the market so fractal. The reason why, because you can take an entry before everything is confirmed. So you can take an entry here if the schematic happened. Once we confirm the bigger schematic that we're looking for before, you know to take another entry out of this last order block here to continue us down, right? So that could happen. Understand that you can see smaller schematics within a schematic. Within a distribution, you can see smaller distributions, but that's besides the point. So for us to confirm that this is going to be our main manipulation, this is going to be our manipulation of liquidity, we need a break of structure, right? We need to come down here and we need to invalidate these lows here. Okay, we just need to see an invalidation of these lows, all right? So there it goes. It just happened. So now we have gotten everything we needed. So now we know that this right here is going to be our up thrust, and this right here is going to be our UTAD. Now all we need to do is to find our entry, right? We need to know what is the last order block, what is the last manipulation that the market wants to react off of. So if we move in, you can see on the 5 minute, we have this doji candle right here. This is going to be your last order block. So I'm gonna zone this out because you're gonna see how fractal the markets actually are. Okay, so you could just go ahead and take an entry within here, and that'll be your entry. This is gonna be your entry, and you're targeting an entire new low, right? That's gonna be your target. So that's a simple plain entry. What you could also do is you could take another entry off a fractal schematic. So I'm gonna go ahead and show you guys that right now. I'm gonna show you guys the fractal schematic that occurred inside of this UTAD, right? So while we were coming up here to mitigate this 5 minute order block candle, sponsor candle, whatever you want to call it, another distribution happened inside of here that you could have caught another entry for more RR, okay? So let's go ahead and let's move this back a little bit more so you guys can see everything properly. And I'm gonna just delete it, and I'm gonna show you guys both entries, but I'm gonna just delete it for now. So let's go ahead and play the market forward a little bit more. Okay, here we go. And then let's go to 3 seconds and let's zoom in. So we just tapped into the unmitigated candle right here. So for those of you who took the first entry, if you would have taken the first entry, that is a basic entry. That is your most safest entry that you can take as of right now, okay? So let's just watch the market and see how do we react. You can see that we've reacted by tapping inside of the sponsor candle here, and we gave a good reaction. So here could be our buying climax, right? Let's say this is our buying climax. Let's just watch the market furthermore. Okay, we got a buying climax, automatic rally, and then we're gonna have our secondary test right here. Let's continue to watch it. Okay, now here, this is gonna be a secondary test slash up thrust here. depending on whether we see that UTAD form now or we see it form later, because we could have something like this and then we have something like this, right? So this would be our up thrust. So the up thrust is always the previous drive before our UTAD. Okay, so essentially now we have the same setup that we had on the higher time frame that I showed you guys before. Is we just have liquidity sitting up here. So all we need now, we just need a drive above here. Okay, so let's go ahead and see what happens. Okay, we see that we have this small drive above here, right? We have this small drive above here, but this here is our main drive towards the upside. Okay, but we see that we did go above here. So to confirm that this is going to be our liquidity raid, we need to break this low here. Okay, market has broken the low. Now we have everything that we need. This is going to be our UTAD, and now we just need our test, right? So what is going to be our test? Our test is going to be the same thing that we said before. It's going to be the last order block, the last thing that needs to be mitigated, which is this right here. So if you wanted to get even more precise, you could zoom in and you could take the fill of imbalance right here. Fill of imbalance, and you could play this one or two ways. You could either take a 1.8 pip stop loss, or you could be on the safer side and make it like 2 pips. But let's count spread. NZD CAD has about like 1 pip spread for me, so this would have been a 3 pip stop loss, which it was. And that would have been that. Target would have been here. That would have been your first target for a small target. And then overall target would have been the same thing as the main low before. So that would have been your second entry. Let's just see how we react from there. Mitigation, and the market falls. All right, simple. That is simply how we execute our trades. I wanted to show you guys this trade breakdown just to give you guys an idea of, you know, how typically our trades go. This is all we're looking for. We're just looking for validation on lower time frames. If you guys are interested in our services, you can hit me up on Telegram. You can hit me up on Instagram, right? You can email me, whatever the case may be. If you have any video suggestions or anything of that sort, please let me know. I will see you guys in the next video. Peace out.